Hey, good morning, everybody. Happy Thursday. It's March 12th, 2026. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. And we bring this to you every Monday and Thursday morning about 8:30, 8:45 in the morning. Talk a little bit about markets, what's happening, what's going to happen. Just to kind of get you a feel for things before the trading gets started. So here we are back to the downside again. The market has been in worry mode, certainly since the start of the war, the battle that's been taking place in the Middle East and Iran. Missiles continue to drop there, and it seems, even though there's a lot of rhetoric about things ending, being finished, completed, and so forth, it's just not happening right now. And with the Strait of Hormuz being closed now, we see oil prices up sharply again, up $6.12, up to $93 a barrel. Even though yesterday it was announced that oil was going to be released from the Strategic Petroleum Reserve, 172 billion barrels or something like that. That'll be absorbed really quickly into the market, and that's why oil prices are still up. It's not having that much of an impact on oil prices just yet. In fact, if you look back historically, when we've had these releases from the SPR, the Petroleum Reserve, it's barely made a dent in supply for the market. So I think we have some trouble here. I'm thinking there's a little bit more truth to what the Iranians said yesterday, that we could be looking at $200 oil very, very soon. I mean, certainly there's been some futures trading above $120, $150 a barrel. So some of those people out there, speculators out there, are seeing that prices could rise, and they can make a lot of money going up into that direction. So one area that seems to looks like they're going to be getting hit is probably airlines. Airlines with jet fuel prices are exploding higher. Look, you know what? It's going to hit their margins, so forth. With the economy already starting to slow down, that's a double hit for the airlines. Higher fuel prices and fewer seats and fewer people in the seats is going to be a problem for Delta, for Southwest, for United Airlines, American Airlines, and others. So, look, you know what? We have to pay attention to what the market is telling us. The market is telling us that things are slowing down right now, right? Plain and simple. If you can't read those tea leaves, I'm sorry, I just can't help you. But that's the problem right now with the markets. They're going down. We're making lower highs, lower lows. Let's just take a look at the Dow Industrials, for instance. I talked about this yesterday, that it looks like the 200-day moving average is the next target for a lot of these indices, the IWM, the DIA, and the S&P 500. You can see the Dow Industrials all the way down to 461 on the DIA. We're at 474 right now, so that would be another 2% down to on the DIA, just to get down to the 200-day moving average. Now, is that an area where you want to buy this market? It's possible that could be an area where the market's going to bounce, but still, lower highs, lower lows is a textbook definition of a downtrend. We're in a downtrend until further notice. The S&P 500 almost hit that 200-day moving average on Monday. We reached down to about 66.25. We continue to trade under 6,800, which means what? If we take a look at the chart here, we're trading below the box that we had put in there previously, between 6,800 and 7,000. Remember, we were right towards the bottom of that at the beginning of the month of March, and we've been trading below it for the past couple of days. So that's not good. Also, you might want to take a look at the trend line over here. It's down from the end of February, and you can see this nice channels being that I'm drawing in right here. I'm not gonna lie. This is negative. This is bearish for the markets. And as we enter into what I believe is a seasonally weak period for markets, it's been like that for the most part of March anyway. We are down for the month of March. We could get down and test these November lows in the S&P 500. What is that? 65.50. Seems unreachable right now, right? Especially since the market's come down quite a bit already, a couple hundred points already. We're at 67.75. But look, 220 points down is not that much. It's 4%, 3.5% actually. to get down to those November lows. And if we do that, we're going to be breaking that 200-day moving average. Why am I spilling all this negativity at you and all this bearish stuff at you? I want you all to be aware of what's going on in the markets, right? If you go into the markets each day and trading with a jaded view that I'm going to make money on the bullish side today every single day, you're just going to lose, right? It's not going to be good, and you've got to pay attention to what's happening in front of you. Be flexible, have an open mind, and go with whatever the trend is, whatever the flow is in the market. So I will tell you that the indicators that I've been looking at are not positive either. Obviously, take a look at the oscillators here. We're at minus 179 and minus 100. Not quite oversold enough yet to see a good bounce in the rally in a rally. Look, if we get down to like a minus 250 or 270, which we were actually down there at about 240 or so on that big rally day on Monday, we could bounce. But it took some news and a catalyst to get that market to bounce. That maybe the war is technically completed or over. I think that there's a lot of politics that goes into the messaging that happens these days. That's just my view. It's not political. It's just the messaging that goes in there. I think that somebody's got one eye on the stock market and one eye on the rest of the world, and makes adjustments based on what the stock market is doing. So call it what you want. Call it manipulation, call it whatever you want to do. All I'm going to say to you is this: we have to adjust our styles, the way we trade, the way we invest, to what's going on and how those things affect prices in the market, right? And so right now, again, the oscillators are negative here. We also see a negativity lately, actually a neutral in the new highs, new lows. Once we get a couple closes below zero, which we got the last couple of days, that means that we're neutral. If we get down to a minus like 100 a couple of times, that'll be bearish. We're already close to that on the NASDAQ. Earlier in the week, we were at minus 200 and so on the NASDAQ. So we are actually bearish on the new highs, new lows list on the NASDAQ. So what do we do? I think it's a good idea just to step back a little bit and pay attention to what's going on and let other people trade and risk their money, right? I mean, if people are making some money on the trades, that's great. If you do have to trade this market, trade quick, trade fast, take your profits quickly, and move to the side and wait for other opportunities to come out. For me, that's not my style. That's not my game, and that's fine. I identify. I've been doing very well for the past. This trading environment is very, very fast, very quick. I'm not in it to make a couple of pennies. I'm in to make many large dollars on trades. And if I'm taking 2 steps forward and 2 steps back, you can obviously see that I'm not making any progress at all. And in fact, I'm just putting myself at risk to perhaps take 3 steps back. That would be even worse, wouldn't it? Take 2 steps forward and feel like I'm good on a new trade, and all of a sudden I wake up 2 days later and I'm in a loss situation. So I don't want that to happen. I know that that's the type of environment that we're in right now, and so I'm very happy and satisfied to step back and wait a little bit, because I know there's going to be a better environment for trading, up and down. And I'm a trend, like my good friend Dave Landry says, trend following moron. I'm going to follow the trend. For right now, currently, we don't have too much of an uptrend right here, mostly in a downtrend, but again, just at the bottom of the range. So I'm going to wait and see how things go over the next couple of weeks. We have earnings coming out tonight from Adobe. A lot of people are looking at that one. I am not. I really don't care. The chart's ugly, and it has been ugly for a while. And the last couple of earnings reports show you why the chart was ugly. And so, no, I'm not on this one. I don't care what it does. I don't care what they say. I don't care if they rally 5,000 points. It doesn't matter. It'll go up without me. Dick's Sporting Goods was good this morning. We also saw a report from Dollar General and G3. Those were not very good. And then later on tonight, along with Adobe, we'll hear from Rubrik, RBRK, and Ulta Beauty, along with Nectar. And Wheaton, which is a silver miner. So everyone have a great day. Have a great weekend. The Ides of March are upon us here. It's coming up on Sunday. No trading on that particular day. What are the Ides of March? That's the day that Julius Caesar was killed, right? So that's on March 15th. Next week, we have St. Patrick's Days. St. Patrick's Day is coming up on Tuesday. That should be an interesting week. Also with volatility index futures rolling forward along to April, along with ES futures rolling forward, and we have a big options expiration week next Friday. And don't forget, Fed meeting next Wednesday and Thursday too. So Tuesday, Wednesday, excuse me, 17th and 18th. So they'll have a Fed decision, policy decision on that day. So have a wonderful trading day. Have a great weekend. I'll see you guys all back on Monday the 16th. And trade well. Have some puts. Have lots of cash. And I'll see you Monday. Thanks.